Something big could be coming for Tesla stock. Tesla stock today experienced a surge in option activity, almost 10 times the amount that you seen yesterday. This is no coincidence. Typically, when I've experienced these option surges in the past from a period of low volatility and low activity, it has always led to more activity and typically to higher prices. Last time we experienced a surge in option activity was in this area in June of 2024, the last time I predicted a major rally in Tesla stock, and that's exactly what proceeded to happen into about the first half of July, where Tesla stock rallied from the 170s up to about 270. And we are seeing this yet again today. So here's the numbers, and they are impressive. Yesterday, let's start there, you had 30 different institutional trades. These are unusual, large trades. They get picked up on the option scanner, totaling $15.1 million with a positive order value of 82%. As of lately, we've been anywhere from $3 million to yesterday, $15 million. $15 million was a larger number as well. So yesterday was larger than the prior couple of weeks. And now today, it's massive. You have seen 207 trades today, totaling $104.65 million with a positive order value of 77%. Option activity just exploded out of nowhere. But this happens to be on the same day that China has announced a stimulus plan for the Chinese economy. So I'm tempted to say these things are intertwined with each other, that you're seeing an influx of bullish option activity today because of the Chinese stimulus. And again, simply put, if China's economy gets better from here, Tesla in China is going to get better from here, and Tesla in China is already doing really good, so that just adds to that. But I do think at the same time, Tesla stock was already destined for a rally. Again, at least in the near term, we're coming off of a 50 basis point rate cut, which is seen as kind of a sugar high for markets. Markets are drawing this soft landing conclusion. Yes, that's going to flip. There's going to be recession fears. The data that we got out today, I will share with you here in this video, was pretty damn recessionary. I don't expect the good times to last forever. There will be a period in time that is, of concern for markets where recession fears will rise. But from now until October 10th, at the bare minimum, I don't see that much to derail this market and to derail Tesla stock, as long as the economic data does not come in really bad. And this has been my view for the last 2 weeks or so. But now after today and seeing this influx of option activity, it's seeming more like that. Again, I will point out today you had a positive order value of 77%. These are institutional trades. These are not retail investor trades. Keep that in mind. So all of this activity is from big money. Today you had volume on the call side of 65% and volume on the put side of 35%. That is almost very close, almost 2 times as many calls versus puts that traded hands today. And if we take a look at the bubble chart, the largest strikes here for Tesla by this Friday is the 255 call with volume of 120,000 today and open interest of 18,000. The 260 call had volume today of 157,000. That's insane. That's like, AMC, GME in their prime status. That's ridiculous. And that's for the 260 call with open interest of 50,000. And volume around the 250 call also high at 63,000 with open interest of about 53,000. Now, the 265 call had volume today of 62,000 with open interest of 18,000. The 270 call had volume of 57,000 with open interest of 14,000. And keep in mind, these are options that expire by next week. If we take it, or this week, if we take it out to next week and take a look, you have the vast majority of the open interest really starting to concentrate around that 270 call, as well as the 280 call. As you can see here, these are the most popular option expirations, or strikes, I should say. Now, sentiment was a little bit on the lower side, though. Today, you were neutral at 52. Yesterday, you were bullish at 69. So some people are starting to question this rally a little bit, and that will likely fuel even more upside as people start to warm up to Tesla's rally, start to chase Tesla's rally, and feel a bit of FOMO. Message volume as well was a little bit on the low side today, coming in at 56, which is technically on the high side of the barometer, but yesterday you were at 60, so a little bit of a slowdown there. Participation ratio today is high at 55. We have also continued to see now for 2 days in a row short sellers covering on their short positions, okay? So yesterday you had about 5 million shares that were on net covered. Today, you have 670,000 shares on net that are being covered, with borrowed shares of 2 million and return shares of 2.67 million. You're continuing to see shorts covering on short positions. 600,000 shares being covered caused Tesla stock, in part, to rally 1.7%. We have 79.3 million shares that are still sold short, that are going to put more and more pressure on the short sellers as Tesla stock goes higher to actually go out and cover on those short positions. Does equal 2.85% short interest of free float, and you currently have about $20 billion sold short in Tesla stock. We also did get some good news today after the closing bell. Piper Sandler analyst Alex Potter has raised his Tesla price target to $310 from $300, keeping an overweight rating. The firm increased Q3 and fiscal 2024 delivery estimates for Tesla after reviewing intra-quarter sales data. Piper now models 459,000 deliveries for Q3 and 1.75 million units for fiscal 2024. Q3 seems likely to be Tesla's best quarter ever, and although European sales are weak, Cybertruck deliveries are supporting demand in the US. The analyst told investors in a research note. The firm cited higher estimates for the price target bump. And in some bad news today for GM and Ford, Trump said that he will put a 100% tariff on every car coming into the United States across the Mexican border if he wins the presidential election. Tesla, as you know, doesn't currently produce any cars in Mexico, but Ford and GM make a lot of cars there. In Q2 2024, 47% of Ford's EV sales in the US were from vehicles manufactured in Mexico and then imported. For GM, this figure was 35%. Ford and GM, of course, also make a lot of ICE cars in Mexico too. Ard's Tesla analyst Ben Callow on FSD just said this on CNBC. Quote, "We've had the opportunity to ride in different iterations of FSD V12 and most recently V12.5 maybe 2 weeks ago. The pace of progress is accelerating. This is because there are no longer compute constrained. They have millions of cars on the road gathering data. We do think they're getting closer." And I think in regards to the Robotaxi event on October 10th, there justifiably should be some hype heading into that event, but we're not seeing that yet. Okay, we're going to see that likely in the month of October. What you're seeing now and why Tesla stock has rallied from the 180s up to the 250s in the past 2 months or so is because of China stimulus. It's because of Tesla doing well in China, right? These are the main catalysts now over the past 2 months. I do think over the next couple of weeks, the Robotaxi event, just the hype going into that, will be another big catalyst to push the stock higher. And if you're a short seller, above 250 really looks like a bad place to be because Tesla typically rallies after this point. Once you get to about 250 and break above that, Tesla stock can see kind of a blow-off top rally from that point. I mean, we've seen this many times before. Back here in June of 2023, you broke 250, you rallied to 300. Again, you broke 250, rallied to 278 here. Again, you broke 250, rallied to 265. Recently, we broke 250, rallied to 271, and now we've broke 250. Where do we go next? I think with this major event coming on October 10th, you could see an even potentially larger rally than what you've seen before. Ultimately, whether or not October 10th will turn into a, buying opportunity, from the standpoint of the stock going higher after October 10th, or if October 10th will turn into a sell the news event, I think really depends on whether or not we get guidance for the first Robotaxi ride. If we don't get definitive guidance on the first Robotaxi ride, then I'm not confident that the stock's going to go higher, okay? From that standpoint, the stock would probably go lower. But I do think, again, another tailwind for Tesla stock that's not going away anytime soon unless we get some kind of, another round of inflation or something that would slow things down, is the Fed cutting rates 50 basis points and the assumption the markets have made that we're going to experience this soft landing and egregious growth, okay? I don't know where this concept is coming from, how Wall Street is coming to this conclusion so easily. It's a wrong one. It's not correct. There's nothing to signify that the weakness in the economy is slowing down. We're not at that point yet. When I can identify that, I will share it with you, and that's why I'm concerned over the medium term, really from November, December, January, February, March. That's when I'm quite a bit concerned. That's when I think the problems will start to show themselves. But again, in the short term, Fed just cut rates 50 basis points. Markets are on the soft landing, la la land trip, whatever we're on. In the near term, that does help support Tesla stock. And I do think as the economy weakens, you're going to get more cuts. That's going to help Tesla regardless. Now, Tesla stock will fall if the markets fall, but that is a building tailwind behind Tesla that's not going away. And the more cuts we get, the better off for Tesla. And in my personal opinion, guys, you're going to love this. I think Tesla stock is going to rally likely to as high as 320 before the Robotaxi event. Now, this is, again, short term. I'm not expecting Tesla will stay at these levels as the economy weakens. There can be a lot of downside when that weakening does start to show itself. And this is not just Tesla downside. This is downside for the broader markets, right? The downside is going to be aggressive as the markets are pricing in 20% EPS growth for 2025, and we're not even going to come close to that. Okay, I think in the event we do get like a full-blown short squeeze, then you're looking at as high as 350. I am factoring in some shorts starting to cover, right? Maybe 20% of the short interest actually being covered on, which is 80 million shares, 20% of that, 17 million shares or so, just going off some rough math here in my head. That could help further solidify Tesla stocks rally. And that's the more optimistic scenario I could see, up to 350. And then the question is, after that, do we get guidance for the Robotaxi event? If we do, then I think Tesla can sustain above the 300s, even if we do get a sell the news event. If we do not get that guidance for the Robotaxi network, then I would expect a larger sell the news event. But this is kind of the way that I'm looking at Tesla right now. The technicals look really good. I don't think there's really anything to say negatively about Tesla as of now. Trust me, I'm always looking for ways to poke holes in my thesis, and I really can't think of anything that is material or constructive for Tesla stock's downside here. Just until the economy weakens, I think Tesla's going to do just fine, or at least until the economic data shows the weakening that we have already started to see. But we do have some catalysts coming this week with Thursday's durable goods orders and GDP report, and then Friday's personal income, personal spending, and a speech from Jerome Powell on Thursday as well. I'm not convinced those data points are going to be super bad, but they could be. It's something to watch out for. Parker Ross on X says this morning's Conference Board Consumer Confidence Report was surprisingly downbeat, dragged down by a continued deterioration of consumers' assessment of the present labor market situation. Consumer confidence declined by nearly 7 points to 98.7, consensus being 104 in September, with the present conditions index plunging 10 points to 124.3, while the expectations index declined by just under 5 points to 81.7. The metric from this report that I track most closely, the labor market differential, the net share reporting jobs plentiful versus less hard to get, recorded its worst monthly decline in 6 months and extended a trend that suggests the unemployment rate will continue to rise. And these things tend to follow each other, okay? When the blue line here goes up, that is that metric in the consumer confidence report, you tend to see unemployment rates follow that. And what's actually very interesting about this is you don't actually tend to see the blue line go up much until you're already in a recession. And this thing's starting to really explode to the upside. We're not in this recession now. I don't know if we're in a recession now, just my opinion. Way too close of a call, but we are really close to one. I'll tell you that. From what I'm seeing, what I'm hearing, my business connects I'm talking to, the economic data that we're starting to see, non-government economic data that is, you're very close to being in a recession. This does suggest more weakening to come. We also did get the Richmond Fed Manufacturing Index that came in at -21 versus -13 as was expected. This was the worst manufacturing number since 2009, excluding the Rona. So things are really starting to get bad in the manufacturing sector. Rosenberg today on X says labor market metrics in the consumer confidence report are consistent with the unemployment rate fast approaching 5%. The Fed's 4.4% cycle peak is soon to look stale and more jumbo cuts are surely on their way. So despite Tesla's chart, which looks like the stock's going higher for a lot of justifiable reasons, Tesla stock likely will go higher. I do at the same time think you want to be a little cautious here in the rest of the markets. I do think raising cash wherever you can is probably a good idea as well. If it takes 4 months for a larger decline in markets to get a really good buying opportunity, I think the longer it takes, the more you can prepare, the better off you and your family will be. That's the bottom line, and that's why I'm warning about this now. Even though I know for the next 2-3 weeks, markets can continue to go higher, and historically speaking, that's what happened in September of 2007 as well. But we all know what's coming next, and it's important to stay vigilant of this, because we could kind of start to see the tide turning before it actually starts to turn. And again, Wall Street, they don't care about these things right now, but the tide's starting to turn at least a little bit in some of these data reports. So let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a great rest of your day, and I will see you in the next one.